Hey there, Singaporean investors. Tired of sifting through endless news, trying to figure out what truly matters for your SGX portfolio? Or maybe you're wondering how today's market moves impact your investments. Welcome to the Investing Iguana's daily SGX market digest for July 24th, 2025. I'm Iggy, and in the next few minutes, I'm cutting through the noise to bring you the critical updates, hidden insights, and my unique take on exactly what happened on the SGX today and what it means for your money. No jargon, just clear, actionable intelligence you won't find anywhere else. The Investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We've crossed the 1 million mark for reads, and with over 900 videos and 500,000 watch hours, content is literally all I do. I also focus on regional and global economic trends, giving you that broader context. So, let's dive into today's most important SGX movements, because you don't want to miss what's impacting your portfolio right now. The Straits Times Index has been showing resilience lately, trading around the 3,280 level as investors remain cautiously optimistic about Singapore's economic recovery. Despite global headwinds from persistent inflation concerns and geopolitical tensions, our local market continues to demonstrate the stability that makes Singapore a regional financial hub. Today's focus is on individual company movements that could significantly impact your investment returns. Let's start with ST Engineering, ticker S63, Singapore's flagship defense and engineering company. Here's the fascinating contradiction that caught my attention. They just announced massive new contracts worth 4.7 billion Singapore dollars in Q2 alone. Think about that number for a second. That's almost equivalent to their entire market capitalization being renewed in fresh business in just 3 months. These contracts break down beautifully across the 3 main segments. 1.5 billion from commercial aerospace, another 1.5 billion from defense and public security, and 1.7 billion from urban solutions and satellite communications. This shows ST Engineering isn't just a one-trick pony. They're genuinely diversified across high-growth sectors that benefit from global infrastructure spending and defense modernization. But here's the puzzle that makes this market so interesting. Despite this fantastic news, shares actually fell 2.13% to close at 8.27 Singapore dollars. Trading volume jumped significantly, suggesting investors were actively responding to the news. This disconnect between excellent fundamentals and falling share price often signals a buying opportunity for patient investors who understand that markets sometimes overreact in the short term while missing long-term value creation. Moving to the property sector, Mapletree Panacea Commercial Trust made headlines with a strategic move in Japan. They're selling 2 office buildings for 8.7 billion yen, which converts to about 78.7 million Singapore dollars. The buildings are Aba Shin Yokohama and TS Ikebukuro building. What's particularly smart about this deal is they're getting a 1.7% premium over their original purchase price. In today's challenging commercial real estate market, especially in Japan where office demand remains uncertain, getting more than you paid demonstrates strong asset management capabilities. Units stayed flat at 1.28 Singapore dollars, which suggests investors view this as a neutral strategic move rather than a distressed sale. Yesterday was essentially REIT results day, and the story here reveals crucial insights about Singapore's property market health and interest rate sensitivity. Mapletree Logistics Trust delivered sobering news that reflects broader economic pressures. Their distribution per unit dropped 12.4% to 1.811 Singapore cents. Distributable income fell 11.3% to 92 million Singapore dollars, primarily due to higher borrowing costs and weaker regional currencies affecting their international operations. Yet shares still gained 0.8% to 1.21 Singapore dollars, showing investors might have actually expected worse results given the challenging operating environment. Digital Core REIT presents a more encouraging picture for the data center investment theme. They kept the distribution flat at 1.8 US cents, but here's the positive twist that many investors missed. Distributable income actually rose 3.5% to 23.4 million US dollars. This data center REIT is demonstrating the resilience of digital infrastructure investments in our increasingly connected world. Shares dipped 0.9% to 55.5 US cents, likely on profit taking rather than fundamental concerns about the business model. The real winner in yesterday's REIT parade was Savanna REIT. Their distribution jumped an impressive 26.9% to 1.7 Singapore cents. Total distributable income grew 26.8% to 21.1 million Singapore dollars. Shares responded positively, gaining 2.5% to 41 Singapore cents. This industrial REIT is clearly benefiting from Singapore's manufacturing recovery and the reshoring trends we're seeing globally as companies diversify their supply chains away from over-reliance on single countries. OUE REIT showed steady, consistent growth with distribution up 5.4% to 0.98 Singapore cents. Their diversified Singapore portfolio proved resilient, with distributable income rising 5.9% to 54.3 million Singapore dollars. Shares stayed flat at 31 Singapore cents, suggesting the market views this as fair value pricing for a well-managed diversified property portfolio. Now let's pull all of yesterday's movements together into my daily market take. What we've seen on the SGX, particularly the contrast between strong business fundamentals and mixed market reactions, really underscores a crucial point for us retail investors. The most important takeaway today, in my opinion, is the market's continued focus on interest rate sensitivity over pure business fundamentals. Notice how REITs with higher exposure to borrowing costs struggled, while those with stable, growing cash flows held up much better. This tells us we're still operating in a rate-sensitive environment where the cost of money often matters more than even great business news. This dynamic reminds us to always consider how your investments respond to interest rate changes, not just company-specific developments. ST Engineering's contract win represents fantastic long-term value creation, but short-term traders focused on other factors like sector rotation and technical levels. Today's movements underscore the critical importance of separating short-term market noise from genuine long-term value creation opportunities. Think carefully about how your current portfolio aligns with these broader trends. Are you overweight in rate-sensitive assets that might struggle if borrowing costs remain elevated? Do you have adequate exposure to the defense and infrastructure themes that ST Engineering represents, especially given global geopolitical tensions? Are your REIT holdings diversified across different property types and geographical regions to weather various economic scenarios? The Singapore market continues to offer compelling opportunities for investors who can look beyond daily volatility and focus on businesses with sustainable competitive advantages and growing cash flows. Whether it's ST Engineering's diversified government and commercial contracts or well-managed REITs with prime Singapore assets, the key is matching your investment timeline with the right opportunities. That's today's comprehensive look at the SGX for July 24th, 2025. Navigating these daily market shifts remains crucial for building long-term wealth right here in Singapore. If you found this analysis helpful and want access to my real-time insights, urgent market updates, and detailed investment research delivered directly to you, consider joining our premium membership community. For less than the cost of your daily coffee, you'll get market intelligence that could significantly impact your investment returns. Don't forget to like this video, share it with fellow investors, and leave your thoughts in the comments below. I read every single comment and often respond with additional insights. Until tomorrow's market digest, keep investing smart and stay ahead of the crowd.